Hey there guys, and welcome back to Alex Invests. For those of you who don't know, I'm Alex. I'm a business owner with a degree in economics, and today the markets are closed because it's Sunday. And I have my little coffee in front of me here, ready for a nice little Sunday. And of course, we went with a little purple. But today I wanted to talk to you guys a little bit about NIO because I do see them set for big growth here moving forward. And the thing about these Chinese EV companies now is they've had that hype run, and they've come down from that. And now, again, we're at a pretty solid base here where I think is actually a pretty good time to buy before they explode here and before they continue their growth upwards, because in the next couple of years here in China and across the world, everyone really is pushing for this technology, this clean energy, and EVs are a big part of that, especially with someone like NIO who's looking to go worldwide and global with their product. So I think NIO is one of those stocks that everybody should be invested in right now, and they're a safe investment because they are just a little bit of a bigger company than some of the other stocks that I talk about. And this is one, although it's a little bit safer, it still offers massive growth potential here, and that's why I think it is a best stock to buy now. So today we're just going to go over the reasons why I think this, as well as their recent closing of their share offering, and then we'll go into the chart at the end as well. But before we do that, as always, please like and subscribe, guys. It really does help out the channel and it helps me create more content for you guys. So on December 14th, NIO announced the closing of its offering of 68 million American depository shares at a price of $39. Now, there was also an option exercisable for an extra 10.2 million shares, which were also exercised by the underwriters. Now, we've talked about these share offerings before. They're basically an all-share offering to underwriters to buy common shares at a discounted price because they are taking on that risk of buying all these shares. Now, these sold shares represent $2.6 billion of net proceeds to NIO. Now, they're going to use this money for research and development of new products as well as new generations of autonomous vehicle driving. And they're also going to use it for sales and service network expansion as well as market penetration and, of course, general corporate purposes. But let's just look at the cash that NIO has to work with for a second here. And that's that $2.6 billion, which is a lot of money. And all this money is needed for NIO to continue working on these products and to continue expansion and being able to be profitable eventually. So we can really just see the amount of money that is needed in order to have a big EV company actually become successful here. And it takes a lot. And that brings me into this next part about smaller EV companies. A lot of people have been asking me, what do you think about this small EV company or this one, And there's a lot of them out there and they could end up being successful. But there's also a chance they're not going to be able to compete with the Teslas, with the NIOs, and the XPEVs as well. I do think XPEV is a very good one to be holding. But we also have to think about the bigger established automakers already. We have BMW, Mercedes, Volkswagen. They all have electric vehicles which are already out or coming out. We got to remember BMW with their i8 and their i3, that was really the beginning of very beginning of EVs there, right? And those came out already quite a few years ago. And these are the EVs which are likely going to absolutely dominate the space here. They already have well-established brands with infrastructure for design, for manufacturing, and to build all of these vehicles, right? And these are all things which a lot of these smaller EV companies don't yet have and perhaps won't have for the next few years, where this technology is really going to explode. And that's what worries me about some of those. Like, we have to think 3 years down the road here, right? In 3 years, Tesla is going to have even greater infrastructure than they already do now with their new plants coming out, whereas some of these smaller EV EV companies haven't even started production yet of any vehicles, right? And because of that, it concerns me. Now, of course, the pie grows larger as the industry grows, right? So we could see some of these smaller EV companies take some of the market share and grow because of that. And of course, with new technology, the smaller ones are going to easier catch up with the technology, right? If they are good and if they have good technology and if they know what they're doing. But without the brand recognition, and because they are behind a little bit from some of these other EV companies, I do think there's a chance that they're going to fail. And again, we can see how much money is actually needed to be able to build a fully functioning and proper EV company. And it doesn't just take millions of dollars, it takes billions and billions of dollars. I mean, we can even see with NIO's offering of shares that NIO just did, they raised $2.6 billion so they could continue advancing. And I have a feeling that some of these smaller EV companies are going to have trouble finding that funding. And because of that, they're going to fail. Even Tesla just raised money the other week, which of course was a smart play because they had that huge upward pressure from the addition to the S&P 500, and therefore it doesn't affect the stock price much. So that was a great play by them and by Elon. But we can just see even Tesla is still raising money to grow and to advance. So again, I just don't see a lot of these smaller EV companies being able to keep up with the big ones. Sure, they can grow a bit, and I think they will grow, of course, but they're not going to grow to that big of a scale. And of course, others will fail who fail to find funding and who fail to be able to raise capital in order to grow. So that's why personally, I like these bigger ones. Tesla is one of my biggest holdings. NIO is one of my biggest holdings. And these are the ones that I see becoming those global names, those global brands, and those global companies, right? Tesla's already there, of course, but I see NIO getting there as well. All right, so now I just wanted to go into the final short form prospectus with you guys here. First of all, as we can see, amount to be registered is 78,200,000 shares. Now that's because of the original 68 million shares and then the additional 10.2 million shares, which the underwriters had an option to buy, and they did end up taking that option. So that is a total of 78,200,000 shares at a price of $39, which gives us about $3 billion as the aggregate offering price. All right, so first I just wanted to show you guys the ES8s and the ES6s delivered here. And we can see this is really where they just started the ES8 deliveries here. In January, we were down at 105, February 36 only. But then we can see as we go on here, we move up into the thousands, right? Which is good to see. And hopefully we see this number continuing to grow here, as I think we are. Obviously, since August, the number hasn't gone up too much and actually has gone down a little bit from October to November, but we do see since the beginning of the year how much we've grown already, and I do expect this growth from deliveries to increase into next year. And the same thing with the ES6 here, right? We start in the thousands, we come down quite a lot in February, but March even, and this was COVID, right? The deliveries are actually increased here, and same April, May, obviously we're getting into the 2000s now here. Even in September we had 3,000 vehicles delivered, right, for the ES6. So again, I see this continuing because now of course they do have all this extra cash to work with. They can work on their production, their R&D, their advancement of their technology here, right? And it's going to make their cars better and make more cars get delivered. And again, here we can see deliveries of the ES8, ES6, and EC6 were 5,055 vehicles in October and 5,291 vehicles in November. So again, we are seeing this number go up, but what's interesting and very good to see is 36 38,000 of the 68,000 vehicles that have been delivered were delivered in 2020. So over 50% of their deliveries have happened in the last year, which is just showing us this growth that's happening, and which I do see continuing into 2021. All right, now I just wanted to share with you guys the consolidated statement of comprehensive loss here, right? This is the summary, but we can see we go all the way back to 2016 and we're in 2020 here, right? But the important thing to note in my mind is the net loss per share here. And we can see the basic and diluted has gone down a lot. You know, if we look at the US loss per share specifically compared from 2019 to 2020, we can see it went from 1.63 to 0.55 net loss per share, and I do see that continuing moving forward. 2021, I see the number lower, and in 2022, I would say halfway through 2022, we're going to see this EPS start to become a positive number, and when we see that, again, this stock price is going to shoot up because finally we're in that profitable territory. And here, this is good to show as well, which is the cost of sales. In 2019, we had about $1.4 million for cost of sales, and now we're all the way down at $527,000, right? So that's good to see. What's interesting to note though is that the research and development has also gone down since 2019. We were spending about $12 million in 2019, and in 2020 we're down at $4 million. So this is something that I'm not sure if R&D is just getting more cost effective here, or if they've actually slowed down their R&D, which I'm not sure if I'm fully a fan of. And of course, their cash in 2020, right, is $2 billion right now. And in 2019, again, we were only at 127 million, right? And again, this 2 billion is going to be even higher now after this public share offering. And we might see now that they have more cash again, they might be willing to spend a little bit more on that research and development. All right, now I just wanted to show you guys the basically 2-month chart here. We're on the 30-minute intervals, but there's a few interesting things to note. First of all, I drew these two trend lines here on our way up, right? And we can see they're converging. So we could have seen something coming. A big drop was likely to happen, and we did. We came through this, right? And we dropped down and we came back down, but we're ready again here for another upturn. You know, we have this amazing price floor at around the $40 mark, and I don't see us going much or at all below that. I could see this come back down next week to closer around the $40 mark, but realistically, it is probably only going to get to about the $44 mark ish, if at all. What is important to note is momentum is just switching now. So Monday, we might see a little bit more of a downturn where, again, it would be a good time to invest, and I myself may be adding some shares. But what I really do see is a continued uptrend, especially once we get through this trend line. We are going to see the price continue to go up here. Another important thing to note is volume is still high. Sure, not as high as we saw back here, but we're still at very high volumes, and I think we're going to continue to see that volume moving forward. So when we do come above this trend line, I do see another big leg up here. In 2 years' time, I do see this stock at about the $120 mark. So anywhere here you do get into this stock, I don't think it's going to really matter in the longer term of things. All right, guys, so that's going to do it for the video today. I hope you guys liked it. If you did, please like, subscribe, leave me a comment as always. And other than that, I hope you guys have a fantastic day, and I'll see you guys tomorrow.